So when you're looking at multiple times, so here's my question for you, Coach Matt and Coach Mark. When you are looking at multiple time frames, so give me, we've got the daily here. Give me the weekly on Apple. And then when you pull up the NASDAQ, they look very similar in terms of just where these breakouts are happening. So when you've got the overall sector doing the same thing that the individual stock is doing, you can obviously approach this in very many different ways. So give me your perspective on how would you approach a breakout on Apple? And I want perspective on both because I've got a cash flow trader here and I've got a directional trader here. So how would you approach this on a swing trade basis and or on a cash flow or position size / investment?
I'll give my assessment, then Coach Mark can give his assessment, and then Audie says you got to cut one of our heads off. We good?
No, that's some violent old stuff. We are love and peace and live. You know what? That was only fun when we could kill Tim every week.
Mark, that was Mark's way of saying I do not want my head cut off
No,
today.
I don't want that kind of I can't be a flippant. I got to be serious when I do that.
Yeah, you say that when the chart sets up for a breakout, and you know the Delta Dog's going to kill this one, and he's like, "Oh no! Listen, nothing to see here, nothing to see here."
It's a Delta setup, and I'm going to pitch a naked put. So yeah,
You've been looking at too much of the Fed analysis lately. Nothing to see here. Banking crisis, okay. Moving on. I see how it works here. It is a really good directional setup. There's no doubt about that. I'm looking at Apple here. It's obviously a leader in the market right now. It's been a leader in this recovery over the course of the last week and a half or so, and it's probably reason 1B, Microsoft 1A, of why the Nasdaq has held up so spectacularly well against some of the other indexes in the recent volatility. And it's also one of the reasons why the NASDAQ is looking at a potential breakout on multiple time frame analysis. So Apple certainly, and we've been talking about the 155, 156 breakout for a while now on Apple, and it is certainly doing it. It was on the scatter report this previous weekend. When you look at the quality of a breakout, and by the way, next Monday night, mark your calendars. I'll get the link in Discord later on today, but Coach Frank is going to be teaching a Tackle 101 next Monday night for breakouts specifically. The Breakout King is going to be teaching breakouts on next Monday. So mark your calendars. I'll put the link for that YouTube Tackle 101. It's our 101 series on YouTube. I'll put it in Discord and I'll have it for you guys later on to tomorrow as well. When you're looking at the quality of a breakout, I never just look at one time frame. I want to look at multiple time frames to see how multiple different styles of traders are looking at this scenario. When you're looking at Apple on the daily chart, there's no other way to put it. You're breaking out. You broke out yesterday. You're seeing the continuation of that breakout here today. You come out to the week. I was going to do the 4-hour chart there. You come out to the weekly chart, and you just see a really clean setup with nothing overhead until you start working into the low 170s. 173 would be that technical resistance zone. There's just not a pivot here. There's no technical foundation here on the weekly chart. You come out to the monthly chart, the longest of the time frames here, and you're just seeing the same thing. Everything leads to that 173 type pivot on the weekly chart by 180 on the monthly chart. And so you are entering into an open air environment here. Yeah, the trade. You certainly would be making this trade even before the Fed tomorrow. You would just be, if you did it before the Fed tomorrow, because you might get a better trade post Fed tomorrow, and the trade might have left the station. So if you're a little bit cautious with the central bank here tomorrow, but you love Apple's strength not only today and yesterday, but over the course of the last little bit, and you love the quality of the breakout, you just do a partial position size. Cut that risk in half by doing a partial position size and then you reassess following the central bank tomorrow. Stop loss placement for me, again, you got to give this one a little bit of room given the fact that you can expect some volatility here tomorrow, but you probably at the tightest, you're probably looking at about 154 on a stop loss. Entry would be just, if you're looking at continuation type trade, entry would be above today's high, if not just the current price. Stop loss right underneath that intraday double bottom right there. It also gets underneath the 9 EMA. And then I think on Apple, you're targeting 180 and you're saying, let's get it up and go. So I just think the quality of the setup here has to be talked about. There's been a few of those big dogs doing really, really, really well. Like we talked about Tesla earlier, but Microsoft's been doing absolutely great. You're now looking at a little bit of a bull flag, bull retracement start to forming here. When you're looking at Google's breaking out and running. They don't even want to give us our hesitation at the $100 price point. That looks like a flyer here. Meta's obviously been rocking a little bit as well. So, the big dogs have shown something. They are being seen by the entire marketplace right now as a safety bid, not because they're safety the same way we categorize safety, but in these environments, they have large moats. And those large moats they have allow them to overcome some of this short-term economic volatility and this short-term economic concern. Whereas smaller companies that don't have that size of moat, they probably have a little bit more risk parameter into it. When Wall Street looks to, Wall Street rotates money. They don't go to cash a lot. They rotate money. They rotate it from commodities into bonds, bonds into stocks, stocks back into commodities. They rotate it based on the themes that are playing out in the marketplace. And right now, probably the number one bullish theme in the market is the safety bid that's coming into the big cap tech type stocks. The Teslas all the way in January and February, but they're starting to get reignited. Recently, it's Google, it's Meta, it's Microsoft, and it's Apple. And if you're waiting on one or the other, it's the one that's setting up and rocking right now is Apple. Microsoft needs to work out a little bit of the bull flag. Microsoft could look really good coming out of post-Fed. But right now, if you're looking at anything in front of the Fed on leaders in the market, Apple looks like to be the one. And again, you do have the Fed on tap tomorrow that you got to be concerned about. That's why the partial position sizing would be recommended.
All right, appreciate that. Coach Mark, give me your perspective.
Well, I mean, the setup's really nice, and I don't have anything to add from a technical perspective. I probably wouldn't do anything ahead of the Fed tomorrow, right? Now maybe it's pre-programmed to run. The only other thing I'd say is I don't know if I'd have a tight stop. I mean, if swing traders are going to do their rules, right? But there could be some back and forth because you could see like you trigger in tomorrow and then all of a sudden there's volatility on Thursday. I mean, the volatility post Fed meetings can last a couple days, right? We've seen moves up and then huge sells off on Thursday and Fed meetings. So if I was going to be in this, it'd be in it from a position trading or that. To be honest, I just don't want to mess with any of that. I want to go get $200 for the April 150s. Like, it's there above above the range. You have technical support levels in the form of moving averages. They can lift up both on the daily and the weekly. I can get about $2 for that. It's down $15 since 5 minutes ago. So $185. That seems like oh my goodness, let me not sweat this. I mean, mega cap tech is obviously a preferred area right now. If I were to do directional trades, it's certain. I mean, you're not going to find better. You're not going to find better, right? You could go mess around with the underbelly, which I think could also run. This is about as good as it gets. Preferred general, like this is about as good as it gets out there. So if you are inclined to say, want to give a little directional shot, you're not going to find a whole lot better from a thematic technical combination. So I still, I question. I was bull last week. Higher things go, the more crabby I'm going to get and get back to my crabby bearish roots. But 150, about $2. That seems like a low stress play, regardless of what the Fed does tomorrow.